Let's get to the big story breakdown. Well, ahead of the market open, we are looking at mixed trading for the major U.S. stock averages. And of course, the two-day Fed meeting is kicking off with the rate announcement and Powell's presser set for tomorrow afternoon. Now, markets have been favoring small cap rotation, and this week, roughly 20% of companies are expected to report. Meanwhile, the federal government faces the possibility of a partial shutdown this week as Republicans and Democrats clash over funding for Trump's Department of Homeland Security. Well, ahead of the market open, joining me here at the New York Stock Exchange is Michael Reinking, Senior Market Strategist at the NYSE. Michael, great to have you back. Thank you so much for joining me.
Morning, Remy. Thanks for having me.
Well, here in New York, we are digging out from the winter storm, but we're also looking at both red and green for the major stock averages. Can you break this down for us?
Yeah, so this morning we're seeing futures are broadly higher outside of the Dow, which is getting hit, kind of given that the healthcare exposure in United Health, CVS, that some of the things that you mentioned after what President Trump said yesterday. Look, we've had a couple of weeks where the S&P has kind of pulled back, but we've started to see kind of that rotation, begin to unwind a little bit, right? So to start the year, as we've talked about for the first couple of weeks, we've really seen kind of more cyclical sectors, small and mid-cap stocks, kind of really outperforming. Kind of starting on Friday, we've started to see kind of the mega cap tech stocks reassert themselves. We've seen software, which has been kind of a very big underperformer, kind of as we've seen kind of some of the Claude, kind of programming, kind of the LMMs from Claude doing some kind of software programming, really weighing on that sector. We've seen kind of a turn. So on the middle of last week, we saw the NYSE Fang Plus Index had tagged its 200-day moving average for the first time in a few months, right? So it's a little bit of a different setup that we've seen for the mega cap tech stocks heading into their earnings than we've seen in the past, where they've kind of pulled back, so maybe lowers the bar a little bit.
Yeah, and as we head into the rest of this week, of course, we're keeping our eyes on earnings, but of course the Fed and also the U.S. government. So first, in terms of tech earnings, what are you looking out for?
Yeah, so look, I think the numbers are going to continue to be strong, right? It's really kind of how markets react to the continued spending by a lot of the hyperscalers, right? And so I think that's kind of the big key. We'll have to see kind of what that guidance looks like, if they continue to increase that guidance. But I think a lot of it is about how kind of the market kind of starts to respond. In terms of the suppliers, right, those companies, right, are going to have very, very strong numbers. We've seen a continuation in the move higher in kind of the memory names, which is kind of the new hot spot within kind of AI, and they've continued to move higher. They moved, they were up last night, kind of helping South Korea up, close up almost 3%, despite the fact that we had, some tariff headlines coming from President Trump. And then in terms of, kind of the other sectors, right, we're seeing kind of more mixed results. If you look kind of holistically at the start of this earnings season, kind of the beat rates and kind of the average size of the beats are a little bit below what we've seen historically, kind of over the last not necessarily historically, but over the last 5 or 10 years. But we're still waiting for the mega cap tech stocks, which can really start to positively skew that data.
Yeah, and you mentioned South Korea, and that was interesting in terms of their record high on their main Kospi index, despite the tariff headlines. So yes. What do you make of what we're seeing when it comes to tariffs and trade agreements?
Yeah, so look, I think we kind of turned a corner, right, last year, where we've seen kind of the kind of high water mark in tariffs, kind of start to move down, kind of on the back half of the year, right? And we've now seen kind of, President Trump is reinstituting, kind of the use of tariffs, kind of to push, kind of trade partners and countries to, kind of do things that the administration wants, right? But we've also kind of very quickly kind of reverse course, or kind of the taco trade, as people have kind of termed it over the last year or so. Right, so it's still part of the playbook. I think a big piece of what we're waiting on is what happens with the Supreme Court. Right, we're not expected to really get a ruling for until kind of the end of February at this point, and it's a question of once the Supreme Court does rule, how does the administration react? How aggressive do they get? Right, do we start to see them kind of slow roll? Kind of some of the reinstitution of those tariffs, right, as they're really starting to focus on affordability ahead of midterms, right? And we have President Trump speaking about affordability today in Iowa.
Yeah, and of course, we will be focusing on the nation's capital tomorrow as the Fed Reserve meeting concludes for January, and we get not just the rate announcement, but Powell speaking. So what are your expectations? And also, if we do get a partial government shutdown, what's the impact on the markets?
Yeah, so look, we'll start with the Federal Reserve. It's kind of pretty widely known that we're not going to get a rate cut this kind of at this meeting. It shouldn't necessarily be all that eventful outside of some of the topics that you had kind of highlighted earlier.
Yes.
What would be sort of interesting is if kind of in conjunction with the Federal Reserve kind of releasing kind of their statement, is if we actually have kind of President Trump also naming the next Fed chair, right? So we've very much seen kind of the odds within kind of prediction markets shift very significantly over the last week, where we've had BlackRock's Rick Rieder kind of move into pole position, kind of surpassing Kevin Warsh, who just a week ago surpassed kind of Kevin Hassett, who was kind of told that by the president that he wanted him to stay in his kind of current role. So I think that is kind of where the biggest potential catalyst from a market perspective in terms of the Federal Reserve at this point, because I just don't think we're going to hear much in terms of rate cuts. And markets have really pushed out the expectations for rate cuts to kind of the middle of the year at this point, right? So we started the year somewhere in early Q1, but now we're looking kind of mid Q1. In the middle of the year. And then in terms of kind of the government shutdown, we just came out of one.
Yeah.
Kind of markets had kind of survived through that. It seems like the tone has kind of calmed down a little bit. So hopefully we can kind of work within Minnesota. So hopefully we can kind of work through that with kind of Democrats. Right, and if we do have a partial shutdown, it's kind of short term in nature. Hopefully it doesn't kind of impact the economic data again from a market perspective, because we're just getting to the point where we're hoping to see that data look a little more normalized.
Yeah, and finally, Michael, before I let you go, there are other asset classes that you're also paying attention to. For example, gold, especially since we saw that surge, that rally above 5,000. But we're also looking at the currency pairs, and particularly the yen. So what's going on with gold and the yen?
Yeah. So very interesting. And actually, so it was yesterday was the first time where the SLV had the biggest trading volume on the day, traded nearly $40 billion. So that's the first time since we've been tracking the data since about 2012 where an ETF other than SPY, which is the S&P 500, actually had the heaviest kind of trading volume. So that was sort of interesting. Some folks are kind of hoping that might be kind of a blow off top, as we've seen just such a massive move here. Right, what we've seen is kind of the yen has been kind of weakening for kind of some time now, along with kind of longer dated treasury yields or JGB yields in Japan moving sharply higher. Right, so kind of the prime minister had called for a snap election in early February. Kind of there's this expectation that could lead to kind of a reduction in consumption tax. Right, and increased fiscal spending, which is kind of weakening the yen. Now, late last week, there were some reports that the Federal Reserve was kind of doing a rate check with some banks, which suggests that they were looking to get involved in the market, kind of along with Japan, right? And so that intervention, that expectation that we could see some intervention, has caused a very, very sharp rally, kind of in the yen over the last couple of days. And the U.S. dollar index is now sitting just above the highs that we'd seen, kind of last year. I mean, the lows that we've seen since last year, right? So we could start to see kind of a little bit of a break here, a technical break in the dollar. That did kind of hit exporters in Japan a little bit earlier this week. Markets stabilized overnight. It's kind of, the weakness in the U.S. dollar could be somewhat of a positive for kind of U.S. multinationals as we kind of see the dollar weaken.
Well, Michael, that was a lot of ground to cover, so thank you so much for joining me as always, and thank you so much for sharing your insights and your perspective.
Thanks for having me.
Thank you.